Manipulation. That's the word that everybody's talking about right now, with zero DTEs being absolutely abused by the market. Tesla was at the forefront on the Friday trade. And of course, last week we saw zero DTEs realistically even ruling max pain. Today, we discuss stocks, commodities, and cryptos for the week ahead, including the key economic news, macro data, options flow, and of course, our lead indicators. Well, welcome back everyone to the Daily Show, where we talk about markets around the world. This is our special weekend edition. And if it's your first time here, congrats, subscribe to the channel, smash that like button. I'm sure you're going to find a lot of value in today's video. We're covering the news, the macro, the lead indicators, and the hottest charts, along with some big flow data that we now have, thanks to it being the weekend. So US inflation is set to stay, a lot of firms believe. 2% is the target. At the moment, it's coming down. But as we know, when inflation comes down, generally there is at least one spiking period. It doesn't usually come down in a straight line. German data also could reveal a recession this week. UK inflation is seen to slow, which was really out of control. And New Zealand's rate hike is most likely coming. This is amongst so many other central banks' interest rate decisions this week, which maybe the market will be looking at across the world. If it's your first time here and you haven't joined us over on Twitter, as we know right now, if you mention the word AI, you'll at least get some percentage on your stock. And if you mention it 100 times, who knows? Could go up 4 to 5%. So that puts us in bubble territory, or at least the idea that we're in a bubble. Nvidia, the standout, semiconductors also starting to break out at this stage. And of course, we all know some of the stocks that are going. So what about bubbles over time? As we can see here, you can see that gold, Japan, Asia, internet, China, housing, we've never really stopped having bubbles over the last 50 years. And we've had some significant ones recently. RK, Bitcoin, just to name a few. I will let you know that generally a bubble will trace around 70 to 80% when it's all said and done of its highest peak. But to short it, you need to see some very significant signs. And of course, we'll talk about those later on in today's video. The S&P 500 earnings and valuation scenarios. Goldman Sachs has put out a little report here, and they're basically stating they believe that the market will end up being at 4,000 by the year ends. Not very helpful unless we believe the market's doing this in terms of kangaroo style. And it already has been boring for around 50 days with a small breakout on the S&P to 4,200 plus, but still to be determined whether that's false or not. And we'll talk about that as we go through the charts later on. Of course, we've got 20x, 19x, 18x, and all these different valuation scenarios. These are not forward PE scenarios. So of course, as you know, we're looking really, if you're a long-term investor, to generally be considering something under about 16.8 as a forward PE, and we're sitting at around 18.8 at the time of this recording. So always remember, investment, trading, swing trading, any of those things, they're all very different and they require slightly different timings and different valuation perspectives. Now let's talk about institutional positioning. So it turns out that there are some lighter flows, and we've seen this in most of our data recently. Retail investors have lightened their positions overall, so sold small portions, and institutions have basically just gone, let's go into cash for the time being. We've got the diamonds here, which show us where we usually would be. And of course, we can see here the current. So what we've basically got is a huge amount of inflows into cash over equities. Active equity funds, interestingly, are getting more purchases than before. And I think what this is it's most likely the market starting to recognize that we are in a new decade of investing. With AI at the forefront, what that will mean, and I see whether you agree in the comments down below, basically we're probably going towards a potential lost decade for index investing. Index investing has been one of the best over the last decades, but the problem with it is when you get a structural change within markets. The old companies die and the new companies are reborn. And I have a feeling that positioning for AI and companies we don't even know about yet on the stock market will be one of the most important things to do. And I think a lot of funds are starting to recognize that concentration is where it's at. And of course, that's why we've seen breadth going so low. And I expect that breadth may continue to be low for a while unless we see massive rotation. But more importantly, there will be companies that enter the NASDAQ and enter the S&P 500 this decade and over the next 2 decades that you have never heard of that will absolutely be those next kind of golden gooses. Finding them, very difficult. buying into structured concepts, potentially a thing that you could consider if you're thinking that far ahead. US Empire State Manufacturing capital spending. Now, this is declining at a pretty fast rate. And when we've seen this similarly, it generally has been, global financial crisis kind of periods, pandemic periods, not necessarily great, kind of signal for the markets, but it's nothing new. We've seen a lot of these bad ones. Here's the Fed's balance sheet a little bit compared to commercial bank deposits. You can actually see what happened with the Silicon Valley Bank. So much outflow going on. The Fed countered it pretty much straight away. And then, of course, now they're tapering, which we've seen even with the reverse repo market. They're not necessarily saying the right thing to what the reality is. So Fed securities and emergency loans versus commercial bank deposits. Yeah, the Fed basically is just trying to plug the hole. And this is, of course, the scapegoat of what's made the market go up so much recently. Let's go through to the lead indicators. The first one, the skew. We mentioned about this being really important. We wanted to see skew compression start to come through for us to say, well, even possible of a top in markets. It kind of held us from being too crazy last week when it came to the NASDAQ. You obviously didn't want to short against that one. We've talked about it quite a few times. But is this the potential of a bit of a minimal blow off top for now? Well, the skew has started compressing. The more this compresses now, the better it is if the market holds up or goes sideways. And we do want to see skew compression. So this was similar to what we had in August of last year and, of course, what we had in April. Are we in with the tops? Well, the skew is definitely one of the reasons that could be telling us that we may be there. And of course, it is a big reason itself. Another one that we mentioned over on the Friday video was realistically that we were going into a pretty big sequential count. So you can see here, we've gone past 9, we're in 10 on the weekly. We're basically in like an 11 read on something like the daily here. And these are fairly unusual. When you get reads like this, it's basically showing us market exhaustion. Now, it doesn't necessarily mean, wow, we're going all the way down, but along with other things, market exhaustion is very important. If we ended up getting to a TD13, that would mark some serious potential of topping. So it doesn't mean that we can't have 2 more days or even a little bit more trading upwards, but the more we go up, the more it leads into that really, really extended market, the more chance of kind of like a flash kind of sell that really catches a lot of people off guard. And this is absolutely a squeeze. You can see it here. We'll come back to the NASDAQ a little bit later on. Some other signals that we had last week, of course, this one here, which can take a little while to play out. We saw high yield bonds drop versus the stock market, which was going up. Usually when you get a divergence like this, the bonds market is correct, but it is not a day trade strategy. It generally is a swing strategy. So again, the divergence is starting to become real. We do pay attention to this, and high yield junk bonds, when they're dropping, so let's say dropped heavily through the Monday, Tuesday, and the market stayed similar, it's just another signal for that multi-month style trade, if that's the way you want to do it. Let's move over to copper. Nothing new. Copper basically created a long leg doji, high, low, open, close. It's pretty happy in this red zone. If we end up going further down, of course, next levels will be around 355. But as I've said several times, it's the Dr. Copper. It shows us usually demand destruction and basically the beginnings of a weaker economy because of the Feds and other central banks' huge rate hikes that they've put through over the recent times. Let's move over now to corporate bonds. Now, corporate bonds have been on the up, which is good. But of course, they did make that low, and still corporate bonds are not making new peaks. Generally speaking, if corps, inflation adjusted, like this chart is showing us, are not making new highs with the market, it is a questionable sign. We have to say, well, what's the bonds market seeing that we're not seeing? It is a swing traders style system, of course, and you must remember that. And I think most of these signals, because they're more based on indicators, they do tend to lead themselves into the multi-month style approach. Let's move over to the Qs. We know that we finally saw a downtick from the Federal Reserve. Oh, thank you. Wow. These Fed guys, seriously, we're not supporting the market. Yeah, right. So this chart obviously shows us the US Fed versus the central bankers of the world. And we're seeing some decline in liquidity coming into the market. We're getting a huge red reading, and I mean it's getting big. The divergence is huge. And when you look at options flow, you'll notice that it is similar to periods of time over here. Now, of course, new well, that's going to take out a lot of stop losses and hunt them all. And with these big red divergences, it is a time to be, in my opinion anyway, cautious in the markets, nimble and fast. Of course, you could totally disagree with that, but I've been cautious since over here, and really only Amazon and Google have even tickled me in terms of being able to go into the markets bullish, because it's been very, very tough other than holding for the trend, unless you were day trading up, or of course swing trades, very, very tough to go either direction here. Let's move over to Move, and you can see that we've got the bonds market still divergent. 94th percentile continues to be the thing. The bonds market's scared. The VIX is being suppressed. We did see a little bit of VIX suppression come off with the options expiry, but not enough yet. So will some kind of black swan event happen? Well, the skew obviously thinks it is, but usually it doesn't happen when everyone thinks it. That's why we're waiting for that skew to get compressed down and that to show us this. Some other signals that came through last week, of course, were the increase in the dollar. So when we see the US dollar go strong and the stock market go strong, again, we question a lot of things since 2022's start. It's been a good indicator in the past of a swing or a turn starting to occur, and I think we need to be aware of that in these markets. Let's jump over to the Gamble Fest and of course have a look at what the manipulation looks like, and it's pretty significant. Manipulation coming through across the board from the street with 0 DTEs. We'll see how bad it was for Tesla in a moment, but take a look at these volumes. Total volume on Tesla, 3.348. Wow, that's huge. That's way above the normal 90-day average. So we're going big, and we're going big on calls. That's what was coming through. Might lead to another day of potential, a little bit of run here in Tesla as people get excited. Put percentage overall, definitely on the decline, getting into those lows. Another notable one with put percentages low is Johnson & Johnson. If we move over to a few other stocks, all of the ones that have been running recently, Nvidia, Amazon, Apple, Alphabet, Meta, Netflix, etc., you can see that the ratios of calls, also these outstanding amounts of ratios, were massive. Also a notable one here is John Deere. John Deere getting a 9.96 reading on it through the Friday, and PLTR is in a massive squeeze. The question is, has it finished? So the squeeze is real. It ran for multiple days. Obviously, we're updating you on this chart all the time, so make sure to subscribe now if you're interested in this stuff. But yeah, that was the big one there. PLTR was running like a 15 or something last week compared to 90-day averages. Let's jump over to some other options that we've seen come through. As you can see here, the biggest trades, again, coming through mostly in single stocks. We had the Tesla, Nvidia, Apple, etc. You can see the put-call ratios here as well, starting to get very much on the call side. And if we actually jump back over just for a second here to this other chart, look at this. 55% of all the markets throughput through the Friday was calls, 42.87 or 807. So that was up from most of the average over the little period of time, but still down on the Thursday's trade, but 55% calls. So we are seeing a market turn very aggressively on the call side, and probably a huge stacking of calls coming through. Again, another sign to be cautious, though we have seen squeezes across the board. And Tesla was the mother of all squeezes through the Friday. There was one trade that was so big that it accounted for over 30% of all the trade volume. And this is just the power of 0 DTEs. I mean, seriously, what else do you want to say about this stuff? We even had a SPY contract, which I think was allocating for the Friday trade or the Thursday trade, something like another, like even over 30% of the whole volume. It's getting wild out there. It's why we have to be on top of this stuff. So we can see here that there's some big call strike. 180 was the favored call strike of the 0 DTEs. No wonder we went towards it as they hedged off. And take a look at this. This is a share from Gordon Johnson over on Twitter, and this is from the Bloomberg terminal. And you can see here, geez, I tell you what, there was a massive trade. So here are all the trade volumes, and you can see 374,000 at the 180 call strike in one day. That's like 32% of the total volume in the stock. And it was just a massive bazooka trade, led us to getting hedged up to that 180, and it was forcing that position. Now it's good because, of course, we were talking about the market getting to 180 for Tesla. So I'm very happy for that. And now we talk about maybe another $2-3 up and then potentially a turn. But yeah, I tell you what, that was a massive 0 DTE, and it just shows you the manipulation going on there. What about the sentiment survey? Can it give us insight that retail is ready, like you and I are ready for actually getting owned and the market goes down again. Well, not quite. Everyone's confused. 37.4% of people were confused. Now, the last time we had a reading like this with the similar neutrality, which is very high, by the way, was over here, and it was the 26th of April. We also had another read where it went 39.9%, which is the highest, I think, in a very long time, which was during February, where everyone started getting confused as the market went down. Overall, it's good to see less bears. It's not good to see less bulls if you are a bear, and it could open us to a little bit more squeeze. It's just a survey report, but generally when we see this go super hot on the bull side and neutral side and way less bears, that's along with, technical turns, that's a pretty good signal. We can see based on Fed Jerome Powell's speech that we went from like 30% chance of potentially seeing a rate hike in June to 17.4. So economists really backing and going backwards and forwards and flipping around with their expectations there. And I just want to remind people, just because I am going to bring up the stats that really matter as much as I can on this show. Obviously, you get a lot of 50, 60, 70% stats. This one here was a pretty big one, which is silver seasonality. And we saw that that was giving us some reads on gold and silver that were in the 31s. So that's already started to lead into a bit of a sell-off with those double tops. Again, it's confirmed by technicals, which is why we like it. But yeah, it just shows you again, silver is not in a period necessarily for extreme swing strength. Generally, it is weak, and then it turns a little bit later on, which is, a point in time, which hopefully we can take some advantage of. We'll see a new dot plot this week. I really want to see what the Fed and the FOMC statement says in the meeting minutes. And overall, the most important component of it is, do we still see a lot of them saying we're going to hold rates for longer? Remember, the market said, oh, we're getting cuts, and the Fed said no cuts, we're going to hold and pivot, most likely, and therefore hold for 4 to 6 months. And I think still that is the main catalyst here. If the market cracks it, it will be fairly fast. And what could be a catalyst for the market cracking it? Well, interestingly, we do have a big earnings this week. I would say this is going to be maybe even more volatile than the 7% that the options market's putting into it. Oh, I just remembered Zoom's over here. It's a blast from the past, that one. So we've got some big, pretty good stocks. Obviously, Nvidia's coming out Wednesday before the open. Expected move between 7 and 8% options. It's going to be a volatile event. It's going to be, obviously billions of dollars floating around. And I think this one could show us maybe the finalized squeeze or even a huge dump. I'm super interested to see what happens to Nvidia over the next coming days past this event. This is real deal. Like, Nvidia is the focus right now, and we know we need to be all over that one, whether it's bullish or bearish, so that we can get an idea of whether we're still going to see ramping or we've actually seen the topping potentially of that area for now. And we should be able to see it through price, but again, we'll have to be patient and react. That's going to be the key thing here. Let's talk about the rotational flows. Well, we've got gold up the top. We've got biotech also coming out a little bit here on the day. A little bit defensives as well. So the market was, I would say, partially turning defensive, not enough to really write home about. Over the last 5 days, it's all been about Nvidia and semis. Technology's also done well, and most of the standouts, and most of the ones I've been hating on, which is, of course, metals and energy, fairly weak over that 5 day, and gold in particular, horrible. Look at utilities as well. Just going into the doldrums there, negative 4.23% over the last 5 days. And that's why you rotate out of utilities at certain times. You generally never hold that sector. It's just not that good. Let's move now into the charts and talk about the big levels. So the first one here is US 2-year versus 10-year. And it hasn't gone back against inversion, so unlikely we get a recession in the US just yet. Usually we can't get a recession until this thing has uninverted itself, which means it goes under the 1. So that's probably not coming anytime soon, which is no surprise, I guess, for most people. Treasuries. Now, treasuries are getting beaten down, and I suspect they're going into 100, maybe even wipe the low. I'm very interested in treasuries, and I think I will mark it again. And this is due to the debt ceiling stuff. Obviously, we're seeing credit default swaps for the US. If you're not familiar with what that is, you need to get on top of that one. Obviously, Silicon Valley Bank, Credit Suisse, it was the precursor of basically those things dying. Now, in this case, we know the US is not going to go into any kind of death trap like Silicon Valley Bank, but the market is clearly worried about something that we may not know yet, and they're putting it in the credit default swaps. So that's hurting the treasuries. Last time in 2011, we kind of saw treasuries get absolutely flogged and then all of a sudden come out of the gate so strong. So if we follow a similar path to 2011, I think treasuries could be an interesting trade, or even multi-month kind of, or probably multi-month kind of hold. Let's move over to the dollar index. It's continued to strengthen, a little bit of weakness here on the Friday. I'd like to see it enter into this red box zone. I still think based on the strength of the weeklies that pullback should be met by buy demand. And what we're probably looking for now is we've got some swings. So these swings will hold demand, and each one of those, I probably expect the dollar index to maybe fall a little bit more, see whether we can find buyers here. If we don't, then of course we go to the next one. If we don't, we go to the next one. Interesting bull zone remains around 101.57 for a bigger swing trade, but at this stage, it's still at an upward trend. You can probably draw a trend line behind it, and the dollar is quite strong. Gold, well, it weakened and then strengthened and then hit right into our heavy traded zone, which just so happens to be, as you can see here, very nice support area, which is now acting most likely as resistance. We're interested in gold here. We want to know, how does it trade around this level that's important? And this basically is all supply now. So I'm looking for gold to kind of put in a new high, turn down, and then potentially look towards more of the short. That's one of the chess scenarios. Obviously, it's going to require patience, but that's the real difference between most pro traders and anybody that's starting off. It's unfortunately a waiting game to see your replication and your edge. Every single person you ever talk to, whenever they say, yep, this is how I do it, they'll always say, well, I trade it pretty similarly. And I always wait for my opportunity that I've seen before and then just replicate that concept, whether that's a momentum style, whether that's a range bound style, any of those types of things. GDX still looks like a double top. Obviously, it's been placed in. Let's take a look at the weekly close here. This is gold stocks, pretty weak looking thing. It does look like most likely buys will be met by sells. So again, that's in line with what we're seeing in the other one. What about natural gas? Great breakout coming off our base. I'd suspect that natural gas will see some declines, and I'm waiting for it now into the 246, 249. This is a risky trade, but I'd like to see boom, boom, something like that. And it's on a fairly hot exhaustion path. So huge breakout for it. I suspect it comes down a little bit now. Let's have a look at oil. Now, actually, I'll go to, rather than go to energy stocks, I'd like to go to oil itself. So oil came up to our most traded zone again after breaching down. Then it's made a high and a low and a higher high. And then we've got a little bit of a lower low here. We do have a trend line, which I think cannot be understated. You can see that's there. And if I put it on, it'd be pretty obvious. So maybe, if it does this, probably there on a new low, we'd be seeing further weakness in oil. You've got to be very careful on this one, because you can make the case that's obviously a good trend line and that it may have falsely taken that low. And even though it looks like it's turning down, it has cases for both in this point. So I think the next reaction will be probably the correct one. Energy stock, that bounced up a little bit. Energy stock tends to do something like this at this time of year. So again, just being cautious here about a potential June run, even though I am bearish on energy. This was a fairly nice level. We definitely wanted this, but now that we've seen this little gap up, we're just a little cautious here. I think, for me, it's maybe a slight trim and then move forward to find out how this trades through the start of June into, of course, later on. And, it's still pretty much the same thing we talked about. For Tesla traders that believed in 180, congratulations to you, I guess. You got your 180, which is nice. Can you get more? Well, let's have a look here. So gap one filled. Nice. We've got a red box in here. We know there's a heavily traded zone up here. We know there's a gap there. So I wouldn't be surprised at all to see the market actually drive another bullish day in Tesla, potentially push into the 184. That's a lot of calls coming through on Tesla, and that's going to get people excited. So although I still maintain that 145 later on, I think this is very interesting zone for bulls and for bears. And particularly, I'm interested in it from the bear side. But we've got to wait and see for some turnover. So Tesla's doing good. It's nice to see the 180. I want to see a little bit more. and then we will report back when we find out whether we can get a little bit more in these markets. But yeah, this is in line with what we thought we saw around here, and just shows you why holding strong to the close points was so important. It eventually came through. Day traders that took this one would be probably smiley faced, because that was a great 2-day trade. How much was that as a percentage? Fairly big. And I've updated here as well. It's about 5-6%. So I've updated here as well the expected weekly options highs and lows. Let's move over to Amazon. A hit into our green box, sold off a bit. They're starting to get a little exhausted, some of these. Like, we've got huge calls coming all over it, but it's a known thing now. We've moved into some of these boxes, and the calls are becoming such a huge ratio that's when you start to go, well, maybe that trade is getting, overall exhausted. You can see Amazon's in the box. So that was a bit that I was talking about trimming. Google absolutely hit my targets completely. So for me anyway, Google for now is just chill, and we'll wait and see. This was a watch reaction here level that I talked about. Let's have a look at the smaller time frames. Go 15 minutes. So you can see the market came out like a bang. Probably hunted a lot of people, and it's come back down. No turn yet on Google, but we'll report back after we see Monday's trade on this one. I'm interested to know what happens on these techs in particular, because they're all hitting these levels. Apple, again, look at this. Look at this. So, Apple comes out of the gates, like out of nowhere, just go boom, and it takes it and then comes back down a little. Very interesting zone. I've seen on the record that I thought that big funds would trim around here. I still think they'd trim around here. And yeah, I'm interested to see what happens next. But if we ended up getting this, so we ended up getting a drop, then I think we'd probably be on in terms of swing bears. There's no signs yet, though, other than we've just taken these highs. So day traders would come in to stop this freight train. I mean, this is a freight train. All of these are freight trains. PLTR, the mega freight train at the moment, that is all driven by call options, huge amounts of 0 DTEs coming all over the place, and a lot of 11 strikes. They're all short date mostly, so you just have to be careful of that. It's known to do this. It does have these big ramp periods. When retail get on it, everyone gets excited. Big volumes, as you can see here. Be cautious, proceed at caution. The normal drift. It's got some big IV on it. What about an Nvidia? Well, as we mentioned, technically a bubble or a valuation mismatch can last for some time. So to stop this is very tough. We haven't seen any turns. We can see here on the weekly, we've got the squeeze still on board. You can see the daily, the squeeze is just ramping up. And it's starting to get very gappy. So what that means is the markets are kind of like running just every day, boom, 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 unusual moves. Have we ever seen that one before? Well, I would argue, yes, we have. We're not just talking millions, we're talking billions. This thing's backed at 772 billion. So we do not predict this thing. We basically have to see a huge dump. I want to see some big player dump it, and dump it big. And as we know, earnings is coming 4 days away. Ooh, I'm actually excited for this chart. I really like spotting these things. And although I may not even potentially have a go at it, it's just something that's always exciting when you go into these and you start to see something replicate, and you start to see it time and time again. So Nvidia, we're watching. KRE, the regional banks. Anyone from Australia would know what I'm talking about with Karoon. Weekly over here, we have not too much to go off. Daily, obviously, we're above the 20 moving average. We hit into the beginning of this. I'd still like to see a 41.35 from regional banks. And yeah, they did a lot of the nice basing formation. They obviously gave some of the best percentages over the last week. Just shows you, again, rotational plays will still give you opportunity, even if you felt like you missed tech. I just need to repeat that. It's not a problem. There's always another opportunity, guys. But yeah, still very far away from its weekly 20. So maybe a base still here for KRE. Nothing exciting on the day trade. What about the DAX? Take a look at this. What is this? A new high. There ain't no bear market in the DAX. Look at it go. Yeah, that's an extreme pick. So that is basically a very rare kind of thing for it to occur. Obviously, we've got a new market high that was rejected through the Friday. Certainly need to question many things here. We know it was one of the most shorted indexes in the world, or indices in the world. And this thing here was, yeah, it's getting hammered on the squeeze. So, all these kind of wick levels have been justified to push through. I've said several times, I'm not touching it. do I want to touch it yet? Oh, I'm actually, I've been excited for it a few times, but I haven't pulled. So yeah, still no signs other than that high take. On the XJO, the Australian market, will we end up getting a bust out and claim some kind of double bottom? I still suspect we won't, even though it's at the critical. So I could see something like this occurring, and I still remain probably negative on the XJO overall here into the back end of May. What about IWM? Tale of two markets continues, much weaker, comes up to these 180s, 179s, and just absolutely gets smashed through the session in comparison to the other markets. If we go to the Russell 2000, you can see the short zone ended up holding up so far. Nice engulf here on the candle with the body going underneath. Not underneath the wick though. Probably looking at new lows to be formed next week, and then a small rally to actually get further shorts through, and targets would be around 1740. Is there a bull case here? There's a bull case once we breach that. That's certainly the bull case for IWM, and that would probably show us rotation across the board. So I think that's going to be a big one. We need to see rotation. Let's move to the Qs. The Qs were bullish. I mean, obviously very bullish. We talked about the exhaustion. You can see this run. It's got all the hallmarks we've seen so many times before in topping off markets for the short term. Whether it's long term or not, we don't know. And you might be getting excited about some drop off. We don't have that news yet. We just know that most likely, at least this is very possible. I just don't think it's worth having FOMO with that many calls, that much squeezing, and yeah, just all on the day trade. What's going on though? Could we breach up higher and go to 345? I think it's possible. In here is the next critical zone. There's no real turn point for the Qs here. So I think that we're, other than you just using support resistance and claiming that, very lackluster. Weekly closed above. Very tough to say, well, that's weak. There's nothing weak. There's nothing weak. Not yet, unfortunately. Let's move over to the weekly Qs. Again, here you can see that sequential going up massively. Last time we couldn't even get past a 7 read. This time we've gone way past that, and it closed above. So again, it could keep squeezing. Be very careful. We'll update you to what we think. What about the S&P 500 versus the central bank liquidity? Still a big divergence. We saw central bank liquidity from the US anyway, the Fed. They kept pushing in. They finally dropped some, and the central bankers around the world dropped some as well. We're starting to get a bit of that darker red here as well. And more importantly, if we look at the futures market action, take a look at this. So we're outside of the daily Bollinger. A lot of people would believe that's a bearish signal. Bollingers can be broken, but as you can see here, daily Bollinger goes up, comes down a little. Often when it breaches it, especially on this, you can see a few days of maybe short. The more important thing is though, is this some kind of BC, UT, UTAD, Wyckoff? And I think that if at the moment, what's going to happen is most likely if we do see sellers, they're going to come into the heavily traded zone. This is where buyers could absolutely recommit to this market and just go boom, boom, boom like this. You've got to be very careful about that. This is a huge trade zone, 20 moving average, heavy trade level, demand. There's a lot of confluence about why that could be where the buyers are. But if we end up getting this, yeah, I think we're going into a swing short. So we'll watch the skew. We'll watch our other reasons. This is certainly a pretty large, what looks like a breakout. And you can say on the weekly, absolutely it's through. So you could make cases for anything. And that's the problem. It's all in the day trade at the moment. The swing traders, for me, I'd just be chilling. If I had longs, I probably wouldn't clean them up yet. All of them anyway. I'd just descale and I'd wait for the next move. This is still a real possibility. And that's the problem with this market. You can see these weekly rejections. We don't know that's a Wyckoff turn. Patience is horrible to have, but it is one of the big differences. If you have employed patience in your trading and it's helped you, then let people know in the comments down below. It will help people to really realize that. What about Bitcoin? Is that giving us any pre-signals? Well, we made a new low into our alert zone. We rallied up to the first level and shorted it, and then found ourselves back up in here. Somewhere in here, you really need the bears to recommit. Otherwise, they go back to this level, 28,000. And look, Bitcoin still is precursoring kind of some weakness here on the charts. And of course, a lot of people are going to be talking about this as a big head and shoulders towards 24,000. I'm not sure how crowded that particular concept is. I assume it is pretty crowded at this stage. But yeah, expect something in here or here to be and potentially the bear coming in. And yeah, I think that's a big one. Rotation will be key as well this week in markets across the board. So we'll be looking at maybe some sectors that you haven't even considered as potential candidates for movement of money, as Wall Street may rotate out of big tech and go into some of the others. Let's go through some other things here. What do we got for the news ahead? Well, of course, we've got a bank holiday from some banks. Then we go into a bunch of news coming out of the Eurozone, US flash services PMI and manufacturing. Then we scroll down to the New Zealand monetary bank statement position, FOMC meeting minutes at 2 p.m. Wednesday. I'm interested in that. I think we all are. This will be very interesting. So we'll see how that goes. That could be a catalyst. Notice it's Wednesday as well, NVIDIA Day. And then we've got unemployment claims, core PCE price index. So bit of news coming out this week, bunch of other central bank decision making. If you're interested in following along, you can do so by linking or clicking the links in the description down below. We've got 3 free trading cheat sheets. You can follow us on Twitter and of course, everything else. Thanks so much for watching, guys. We'll see you in the next one. And what an interesting week ahead. I think it's clear that we're just having to follow these 0 DTE options as much as possible. And don't worry, we'll be bringing you even more details in terms of what's going on in those markets to try to spot things before they happen. Bye for now.